Welcome to the latest edition of the Omni Talk Retail Ask an Expert series. I'm your host, Chris Walton.
And I'm Mezzenga.
And we are the founders of Omni Talk, the fast-growing retail media outlet that is all about the companies, the technologies, and the people that are coming together to shape the future of retail. And our next guest 100% needs no introduction. Ethan, how have you been keeping?
I've been doing well. How are you guys doing?
Doing well, Ethan. We're so excited to have you back. I'm excited for this round too. It's a little different than what our audience has seen before and even what Chris and I have seen before. So the top retailers to watch. I can't wait.
Yes, Ethan's been on our show many times. So Ethan is, of course, Ethan Chernofsky, the Chief Marketing Officer at Placer.ai. And as Ann alluded to, Ethan is here to share his 2026 retailers to watch. Now, what does that mean? Well, your guess is as good as ours, because now for those listening and watching in real time, listening at home, keep in mind, as we always do whenever Ethan appears on our show, Ann and I have literally no idea what Ethan is going to share with us. And we, like all of you, will be reacting in real time to what Ethan says 100% organically. So should we get started, Ann? Should we put Ethan to the test?
Let's do it. But before we do, really quick, make sure that everybody who's joining us live right now, you have the opportunity to ask Ethan any questions that you might have, any rebuttals that you might have about his retailers to watch. You put those right in the chat to the right-hand side of your screen as we go along, and Ethan and the Placer team will make sure to answer them as we get started. So with that, Ethan, let's do it just to make sure we check the box. Okay, Ethan, what is Placer, and what is it about the data that you collect that makes it such a useful tool to provide the insights into the topic at hand today, Ethan?
What a fantastic question. So Placer is a location analytics company. What that means, people vote with their feet. We show you how they vote across the United States every single day by analyzing a panel of tens of millions of mobile devices and then utilizing machine learning and AI algorithms on top to make estimations of visits to retail locations across the country. And we can see everything from visit frequency, the customer journey, true trade areas, visits, obviously, and visit trends, and a whole lot more.
I feel like I've heard that a couple times now on this show, you know? Yeah, it's funny for the audience to know how the sausage is made. I screwed up our tagline and had to re-record where Ethan just nails it right from the get-go. So Ethan, with that out of the way, what is the first thing you're going to share with us?
The first one is down the middle. Because when you think retailers to watch, you want to talk about the retailers that you think are going to do very well, that you're really excited about. And this is the one where we kind of just tip our cap to great retailers that we think are going to have great years. And I think what's interesting about some of the retailers that we were focusing on this year is there's different reasons why we like them. So if you look at something like EōS Fitness, really great retailer, really great offering, really amazing sector, this is a good reason to expect them to do extremely well.
Who is EōS Fitness for those who might not be familiar with them?
So they are one of these rising fitness players that is oriented towards a cheaper point of entry and being kind of more value oriented. So that is a space that is clearly really exciting. The fitness space in general is one that you could just throw in 7 or 8 different chains here because fitness is doing so well. Give you one of the more interesting data points that we are fascinated by. Traditionally, fitness does extremely well in Q1. We have our New Year's resolution. It starts dipping. You see a pop in October, and then November and December crater. And then you get this big jump between December and January. That jump used to be massive, 30% plus. In 20 to 23, that number was 27%. In 24 and 25, that declined to 22%. And this year, it was down to just 17%, the jump between December and January. This, while visits were up year over year, even though there was a week where visits were down almost 10% because of the storms. So what that tells us is this really high-performing sector, it's being driven by the fact that consumer behavior has fundamentally shifted. Fitness is now non-discretionary. It is something that people are doing. They feel like they need to do it. Health and wellness is here. It is lasting. It's a huge shift. So that's something that, like, again, all the ingredients are there for so many of the players within this segment to do extremely well. But then there's other players that are kind of hitting on really key themes. So H-E-B is one that we're talking a lot about. We're gonna give a hint, the spoiler for 7 minutes from now.
Hint
of we're gonna focus on grocery a little bit. But HEB is one of these kind of outliers. When we think about the middle in grocery, the traditional grocers, they're feeling a lot of pressure. HEB has stood out, and they've stood out by being unique. They've been uniquely focused on their local perspective. They've been focused on how they have these adjacent innovations, these new offerings that make sense, that are still kind of authentic and feel like within the HEB brand. So this is something that kind of really stands out. I love other brands. I'll call out one more, and then we kind of like open it up. But like Michael's is another one that's really been exciting for us because I think it's a retailer that was doing well, and then you removed competitors. And when you
Mm-hmm.
do that, they
Hmm.
just do extremely well. And as opposed to some of the competitors, they were always hitting this higher income bracket. So it's not only are they grabbing the visits from these competitors, but they have this unique part of the market that gives them even more exciting trajectory. So these are just some of the retailers we're really excited about, and they're hitting on themes that generally get us really interested.
Yeah, that's an interesting point about Michaels. I mean, I think I saw an article yesterday saying like they're selling a ton of balloons now, which makes sense because Party City, left the landscape. And, so now it's just a question of how long can they maintain that momentum and also build upon it too. I'm curious, Ethan, your comment about fitness. We've had you on the show many times. And one of the data points that's been an inspiration for me is the changing behavior of work, and particularly work from home, in terms of where you need to think about your stores, what it's doing to the grocery industry, the quick service industry too. Is that also a factor here in the fitness story in terms of people having more time to devote to fitness and it therefore becoming kind of a non-discretionary activity?
I think so.
You think
I
so?
think so.
Okay.
It's not something that I could prove, but I think it's like I think the biggest piece is health and wellness. We think about, again, if we go back pandemic time, we think about what changed and what changed that was like, all right, it was a short-term shift, and then people went back to their normal behavior. And what was, that's it. We just look at the world differently. I think health and wellness is one of the biggest things that changed. And you see it in terms of like things like alcohol consumption, uh, you
Mm-hmm.
know, uh, the consumption of kind of health-oriented products. These
Mm-hmm.
are all interrelated. We just care more about this issue now, and it's
Mm-hmm.
becoming something that we lean into. And it's again, we're 6 years later, and it's still growth on growth on growth, which is unbelievably impressive.
Yeah, the interesting data point to me would be like, where are people going to the gym? Do you see more people going to the gym near the office relative to where they were before or relative to their home to where they were before? Is there a change in that pattern? That'd be something interesting to explore.
Yeah.
All right, Ethan, what's next?
Okay. The next is a group that I'm calling convinced mostly question, right? So
Oh,
this is a
wow.
group, right? I am excited about. I feel
Okay.
like, oh, this
Okay.
is like if I would put all my chips into the middle on that first group, I would put a lot of chips, but I'd hedge a little bit, right? And so
Okay.
this is a group that for me, the number one chain I think of is Starbucks, and there's a few others that I think fit here as well. Starbucks, I mean, let's think about the reasons why. Like when we're looking at a retailer that we think is going to surprise or bounce back, what we're essentially trying to ask is why are visits down? Because they usually are for a retailer that's going to bounce back. What has the company announced from a strategic perspective? And do the gaps and the indications of why those gaps are being created, does the strategy solve those gaps? And if they
Mm-hmm.
do, then we're like, okay, this is someone that we believe in. We think this is exciting. And I think Starbucks checks all those boxes. So one, visits weren't down like 30%. They were down a few percentage points. Obviously, it's a huge retailer, but they were down a few percentage points. And then you have this kind of new leadership that says, we're going to try and do something that's complicated, right? Everyone in the space, or most of the biggest rising players, the Seven Brews, the Dutch Bros, are like, we're going to be super convenience oriented in and out. And Starbucks says,
Yeah.
we're gonna do that. We're gonna be convenience oriented, but we're also gonna try to bring back the third place.
Mm-hmm.
And we love that because we think it creates something that otherwise would be missing. It zigs when other people are zagging, and it leverages their massive strength and reach to kind of double down on what they were traditionally known for. And I think this combination of strategy alignment, trust in their ability to execute is all working. And we saw the indications of it already in Q3 and then Q1. This I should say Q4 2025. Apologies. Like that was even bigger. This is like an exciting turnaround. And then you add on top of that, they just do things that nobody else does. And I'll give the example from
Mm-hmm.
the holiday season. We know there's going to be a huge spike on Black Friday every year. Then they do Red
Yep.
Cup Day, which is always a massive spike. And again, it's a free red cup. Let's not go crazy. Like it's still massive spike in visits. They did the barista thing, which was enormously successful. And you're just like, here's a retailer, or excuse me, a restaurant chain in this case, that knows how to generate urgency and excitement. And it's, again, it's a cup. Like it's just super impressive the way they understand their audience and how they're able to build on their strengths. I would add to this category one that I think you'll agree with and one that I know pretty confidently you won't. I think Home Depot's in this category too. I think they've had some like challenges that are like, the pull forward of demand
Oh,
and all
yeah.
that. And I think they're going to come
I
back.
agree with that.
And I think I also, and I might be swayed by their recent announcements, but I'm tentatively excited about Target because I think Target is starting to talk about things that we spoke about at the end of last year, where this is a retailer that does certain things very, very well and they need to focus on fundamentals. And it feels like these recent announcements speak to, hey, we're going to focus on those fundamentals. So that also makes me excited.
Yeah, Ethan, I think one other important thing to call out too is Starbucks adhering to some of the trends that we're seeing in the market that we just talked about in the last slide. Increased use of GLP-1s, making sure that they have protein offerings now in their coffee. Like they're also, in addition to making sure that they're the most convenient, I think where the potential for Starbucks is that they're able to do some of these things at scale that it's hard for a small independent coffee shop to offer protein cold foam, right? But
Yeah.
Starbucks now can double down on that and be the place where when we see a reduction in alcohol consumption, an increase in coffee consumption as the third place or the thing to do to go out and grab with a friend. I think those are other trends that are like going to help, as you're talking about here, Starbucks hopefully kind of come up and continue to see success in the year ahead.
Yeah, absolutely. I agree with everything there.
Yeah, that's a good point, Ann. The one question that I have too, Ethan, and it's I think why you say you're convinced mostly is there's still a lot that's got to be shown out here because like if I look at this graph particularly, like if I just put these quarters on top of each other, it essentially looks like it would become a flat line, which and that flat line performance has not been where it needs to be for Starbucks. So that still is a question. So at some point for this to turn around, we need to see that bounce above the top line on on the 2-year stack trend. So yeah, it'll be interesting. And and then when I think about Home Depot, I 100% agree with you. I would be betting on Home Depot, but with Target, that's where the big question for me is. I'm curious, like that traffic line has not even stayed flat. As you look at it, it's been decidedly going down over the years. So they've got a much bigger kind of they've got a much longer road in front of them, so to speak, than say Starbucks does on the recovery. If you take that perspective on it. All right, what else you got?
Okay. I have the future of grocery question, and I'm stealing from my friend Eric Hainer from Dunnhumby. He used language that I really liked, and he basically said, grocery success is being driven by what he labeled it as 3 groups. And I think it's a good classification. The first is quality first, so like the Sproutses of the world, and they're going to win on quality. The
Yep.
second is value first, the Aldis, the Lidls of the world. They're going to win on being like, cheaper, right? You're going to get the things you need and you're not going to spend as much.
Yep.
He's like, those are great. He's like, the middle's going to feel compressed. He's like, but there's a group within that middle and even on the edges of the spectrum that are even more interesting. And he calls those he basically says they have a unique offering. They do something uniquely well. And he would put H-E-B in that category. And he would, I think, put Trader Joe's in that category too. Obviously values there too, but of like whether it's local focus, their innovation, the draw of their products and brands that they house. Those are things that they do something really special. And what I thought was fascinating there is if we accept that we're going to see pressure on the middle, those traditional grocers who are going to have to battle more for that share of list. And this was something that was coming up again and again. We spoke to groceries at some of the big events that we've been to in the last few months. It's not just basket size from a dollar perspective, it's the number of items in the basket that's getting them a little bit nervous. They're trying to figure out how to increase. And we know the consumer behavior is leaning towards more stops within a kind of segment, less time at each individual location. You really have to ask, why am I buying things from you? What is the thing that is special that I'm getting from you? And I think that's going to be a huge driving force. And I'm really interested because I think, look, they got a chain like Kroger. They've been unbelievably innovative in trying things. They've been pushing the envelope in a lot of areas. Not all of it's worked, but they're trying things. And like these things that they're trying make sense. And so does every one land? No, but you wonder what they're going to roll out over the next year. And we think about that previous slide, when we talk about challenges and then does the strategy address the challenge, what I'm really interested to see is the things that you hear that they're inevitably going to roll out over the next 6, 9, 12 months. Are they looking to address this issue? And therefore, what are they doubling down on?
And do you think Kroger's doing that?
I think Kroger is a super strong player that has good visit metrics
Mm-hmm.
and is dealing with the challenge that everyone's dealing with after that not being a challenge at all 3 years ago. So 21, 22, you won the visit, you won the basket. Now that's a big problem. It's not a
Mm-hmm.
given anymore. And so I think Kroger was looking at things like, how do I take this storeless future to new regions? Because that would be a more
Mm-hmm.
efficient way to break into those. They've rolled most of that back. I don't think that's their future. And so
Mm-hmm.
I think there's a lag between this is what we think the biggest problem is, here's the innovation we're rolling out to solve it, and now there's a
Mm-hmm.
different challenge. So what's the innovation they're going to roll out? I still am a huge believer in retail media because of this, because I think it raises the value of each visit. I'm a big believer in things that are going to boost discovery. I think elements like increasing the caliber of products is going to be something you're going to hear a lot about because we'll talk about this a little bit more, but I think value is a super opaque area and it's not going to serve traditional grocery as well anymore. But that I have a lot of confidence that you're going to see exciting things from Kroger.
Yeah, that's a really interesting perspective that I haven't heard before. Particularly with the new CEO coming in too. Like, what's his take going to be on how to do this? And the other point too that I think's really germane to how you frame that up too, Ethan, is like, where are they going and how are they trying to ameliorate the pressures, right? And they've said that they're going to go into their larger formats at least prior to the new CEO coming in. But I'm guessing because they announced that like a few weeks ago that that's probably still on the table. That's to get the margin mix of the discretionary categories that a supermarket doesn't traditionally carry, and that's the outgrowth of why of why they're doing that, because of what you're saying here, because that's where they're feeling the pressure. So that's a really interesting take.
Ethan, I guess I'm to kind of, I was thinking along the same lines that Chris was. And if we take your a step back and we look at, you're talking unique food offerings, localization with things like Sprouts or Trader Joe's, and then you juxtapose that with, Kroger, what Chris just talked about, talking about opening larger formats with more general merchandise and trying to fulfill more of that trip type and maybe focusing more on convenience. Do you feel like there's one that you think stands to give Kroger a better chance than the other? And if you were advising this new CEO, like which direction would you suggest that he go in?
I like focus. I think
Okay.
focus is easier to deliver on because you know
Yeah.
exactly what you're trying to deliver. I think going broad, like there are people who've done it, like Costco.
Yeah.
Costco does things that make no sense, but Costco is just so good at everything that they can pull it off. Costco is the LeBron James of retail, right?
But
They're
they're
good at everything,
focused.
right?
Yeah.
But they do things that, like, why are there TVs at Costco?
Yeah.
Why are you selling lawn furniture? But it works. Like you'll buy it there. Again, like my father-in-law gets his hearing aids at Costco. Like that doesn't make sense. But it's like, again, they're so good. I don't think that that's easy to replicate. Whereas
Right.
I'm not, none of this is easy, but I think it's easier to
Mm-hmm.
say, this is who our audience is. This is what we bring to them. This is what we do very
Yeah.
special. And we're just going to keep on doing a little bit more of that.
That's an interesting point too. Like, let's just become a better grocery store. And what does that get us? Versus like, you try to build out a mass merchandising experience like they're saying they're going to do with these large format stores. That's going to take time. It's going to take a lot of capital, and it's a really crowded space, as we just talked about with Target. Target's not necessarily doing that well in that space right now either because of all the competitive pressures they're facing. So yeah, that's a really interesting way to look at it, is like just become a better grocer, if I'm putting words in your mouth, Ethan.
I'll give you an example of one that I really like. I If you go to Publix, they have a huge section now for like protein-based foods.
Hmm.
And they're all like packaged. Like you're not getting a box of Quest bars, you're getting like one. So there are these high margin items that are almost like a convenience store perspective of like, I'm sending the single one, so I'm going to make more dollars per entity per unit. And then this is an area that they clearly think is a bigger part of the shopping trip, and so they're expanding their footprint for that area. Like that's something that I think is really really smart, and it's like having a wider range of products. People get pretty passionate about which products they use within that space, and it's like the opposite of a loss leader. It's a it's it's like an I love it leader. I don't know. That's whatever. Working title. Like
Yes. Yeah.
it's the thing
Yeah.
that
Work
I
in
really am
progress.
passionate. It's the product I'm really passionate about that I'll make the extra trip to get. And that's a reason that I'll go to this grocery store as opposed to
Yeah.
another one.
Yeah,
That's what
that
Trader
makes a
Joe's
lot of
does so
sense.
well.
All right, Ethan, let's go to the next one.
Next is the direct to consumer question. And we could have titled this the digitally native
Hmm.
question because I think it's like, you know, Allbirds was one of the digitally native communities, especially those who were like, oh, physical stores for the digitally native. Watching
Yeah.
Allbirds announce that they're going to be closing all their stores but two is like a shot to the heart. Now, it was a great analysis someone once did for us on Allbirds, where they basically said there's just not enough turnover in the merchandise for it to be make sense in physical stores. They should have been going through like wholesale relationships.
Yep.
And so, but I do think this is whenever you see something like this, it has ripples and brands get a little bit more skeptical. So I think you're going to see a slowdown in digitally natives, like looking for these these physical locations or these own physical locations. But I don't think it's going to go away. I just think it's going to be a much more realistic perspective of when they go into it, it's not going to be saying, hey, how do we get 100, 200 locations? It's going to be saying 5 to 50. Like we'll start off with major areas. We'll probably have like big malls around the country or certain areas. But the unlimited, endless expansion potential for these digitally natives, I think that perspective has now gone away. Like Warby Parker is obviously the exception to the rule, but I think they're clearly the exception.
Mhm. Well, the other thing too, I'm glad you brought this back in because I feel like in the last 2 or 3 times we've had you on the program, we haven't touched on this topic very much. But like, to me, it just comes back down to the age-old question, which you kind of said, which is, are you a retailer or are you a CPG or a brand at heart, right?
Hmm.
And what is the business model that you're running, and then make your store or your wholesale strategy an extension of that, and that's what it comes down to. And so, and you just test out the market, like you said, you go slow where you need to, but you go fast. If you got a good retail brand in front of you, go fast. That was always what we said about some of those retailers too. And during like 5, 6, 7, 8 years ago, we'd be like, if you have such a successful retail brand, why aren't you scaling faster than you are? Which, and then those guys went out of business too. So that's what I take away from this discussion. Ethan, do you agree with that?
I do. I also think there's this weird question of, and it is an inevitable problem of like as you grow, do you grow by new locations? Do you grow by new areas, by new products? And it
Right.
like some retailers like your point of like, are you a retailer or are you a brand? There are some that like, okay, I'm going to expand into this market. I can have more locations, or I'm going to be more wholesale oriented. I can have different products. And there's some that just need to like, it's okay that a retailer fills a very specific void and does that well. Like there might not be endless expansion potential. And that's okay. And I think
That's okay.
that's you can build an incredible business around that. It just doesn't necessarily fit with like the quarterly earnings cycle for publicly traded companies.
I
Right.
think the other thing that you have to look at too is like I think Lulu's, the apparel company that just expanded their footprint in Nordstrom. I think it also is a question of, one, are traditional retailers or wholesalers more interested in a new kind of partnership with these D2C players because they provide a low entry point for Nordstrom shoppers? Like now Nordstrom's getting Gen Z and the following generations in the doors when they never would have been able to go to a Nordstrom or think they could afford a Nordstrom. I think you look at some of the like I was surprised to see that headline because you don't expect a retailer like Nordstrom to bring in a lower price brand like that. Like it was counter to what Nordstrom says that they would do and kind of their ethos as a brand. But I think that Nordstrom softened now on what it's not just a wholesale relationship we're going to have with them. We actually want to give them space in the stores to kind of be the entry point for this next generation. So I think it's also the changing relationship of these partners and what a wholesale agreement looks like, a shop and shop agreement looks like with some of their partners too. That's helping them all win versus Lulu starting a massive store expansion and not being successful.
I love that point so much. And I also think it's like such a good antidote to so many of the challenges that a lot of department stores are facing, where
Right.
it's just, it's the same thing for 20, 30 years. Like you need to mix it up. This is that we have rising digitally natives, we have
It's the
the brands that
hybrid.
have these footprints. Can you find that balance
Mhm.
between them? I know some have tried and it hasn't really worked out as well, but I think these are really exciting examples to look into because if they show promise, there's a lot of benefit for everyone involved.
Right.
Mhm.
Yeah. Good
Yeah,
point,
it's a
Ethan.
hybrid approach. It makes sense. Yeah, the other point I take away from what you said too, which I never thought about before, Ethan, is like the extent of your product portfolio matters if you want to try to become a retailer. If you want to go from brand to retailer,
Yes.
right? Like the Gap didn't become the Gap just selling sweatshirts, you know? Allbirds sold a shoe that you don't need to buy that often. And it tried to get into other categories, but it wasn't successful. And so have you figured that out before you venture into retail? And have you done the math on that? Or should you take an approach like Ann just said, like where you go, you know, hybrid or you go wholesale traditionally and make it work? All right, what's next?
Okay, this is the thing that
Ooh,
I'm
haven't touched on
I'm
this in a while
I'm
either.
struggling with this a lot. Okay.
Yeah.
We did something we're doing for the first time. Again, little spoiler, because we got a Placer Discover coming up with our mutual friend Ben Miller from Shop Talk. We did something
Oh,
different.
cool.
We're not just looking at the data. We did a survey of professionals in the space, and we asked them some questions. We had like hundreds and hundreds of people respond. And one of the questions we asked was like, what segments do you think are going to do? Do you think they're going to grow? Do you think they're going to be stable or decline in next year? And the fascinating one for me was that the discount and dollar segment was basically flat people saying positive and negative, and so growth or decline, and almost 70% said it was going to be stable. They thought it would be stable.
Hmm.
And this kind of lines up with what we're seeing. Like this is a sector that saw growth, these massive expansions, then all of a sudden maybe they overextended. And but what's coming up for me a lot is something that piqued our interest in convenience a few years ago. And I think we were correct then, which was convenience is an overrated concept because we don't know what convenient enough is or isn't, right? It's convenient enough to drive really far to go to Trader Joe's, but it's not enough to go to, I don't know, insert traditional grocery name here. I think the same thing for value. Everybody knows value is important. I, Most people that I speak to don't know how to define it. I certainly don't know how to define it. And as a result, I think it's not the most useful thing to talk about because we don't really know what it means. So people will tell you value is not price. Right? Value is how much do we love a product, and do we feel like we're getting a good deal on said product. That means that the important thing is not the value per se. It's, is the product great? Do people perceive the product to be excellent? Because otherwise it's circular logic. Oh, they're not doing well because they don't have enough value. They're doing well because they have value, but we can't define what that means. And so I'm struggling with this idea of, is value it's clearly important, but is it a relevant thing in retail? Because it's too abstract of a concept. So value retailer, I think, and obviously in this value segment, there's easy to differentiate, but I think there's a question about the conversation around value, and does it matter if we don't know how to define it?
Mm. That's really interesting. What I think of is actually, I think value is the art of retail. Value to me is the merchant. That's where the merchandising comes in. And there is no definition of it. And that's what makes it special. And it's different for each brand, it's different for each retailer, and you have to discover it and put it into the minds of your consumer. And that's what the really good retailers do really well. That's what Costco does phenomenally well. And they are focused on, they know exactly what metrics they want to hit, what products are going to sell for their consumer, and they provide that value to them. Whereas when you start to get across like the grocery landscape or even the dollar landscape, it becomes a little less clear because, you know, value starts to play into things differently. There aren't as many points of differentiation. But that's how I think about your question. Is I think your question's right, but that's also where you make your money.
I like the idea that it's an art, and I think for me, we care about the art, but with data, you care about the numbers, right?
Yeah.
And I almost don't want to talk about value so much anymore, except to make this point
Yeah.
because it's not a data number.
Yep.
It's something so much more abstract. And I really like the way you put it. And I think the more we embrace that that's the thing, it also changes the notion because I think when you talk about value to so many people in the space, they do still think of price. They're like, oh, it's about
Yeah.
making things cheaper. And I think a lot of retailers hurt themselves by chasing value by bringing down costs as opposed
Mm-hmm.
to by chasing value by making products that are amazing or making
Mm-hmm.
products that are perceived to be amazing. Like there is an element
Mm-hmm.
of perception here too that matters.
Mm-hmm. Mm-hmm. Yeah, I mean, the one thing I always took away from my time at Target was the expect more, pay less thing is a really good measure of like how you should be thinking about value from a merchandising perspective. The other thing I love about what you said too, Ethan, is I think you're 100% right. Value to me is what you're showing on these slides. It is the output. It is the measure of the output. Like what the traffic number is tells me how much value there is relative at that retailer versus another.
Okay.
I think the other thing that I guess I would question here is value according to which category. Like if we're looking
Sure.
specifically at dollar store, yes, there's do people care what plates they're using for a party, or the basic home essentials that you're buying, the party supplies, those kinds of things, is that a category where like value and cost is important? Yeah, because you can go to a dollar store and get all these things. But I think that changes when we start to get into other categories like apparel. I think it starts to change when we get into categories like beauty, where value is actually, more along the lines of the art of what Chris is talking about than it is about, what's the cost and how does that drive traffic for one specific category. So that's the one like question I guess I would raise when we're looking at the value question as it compares in a dollar store set versus, even a general merchandise store like a Walmart or apparel or department store.
All great points. All great points. I just think I realized that I was using value in a terminology
Yeah.
that, in a way that was like, it doesn't actually mean anything. Like it's
No, it doesn't.
undefinable, and therefore, at least for me, like I agree with everything you're saying, and I think there are people who do a good job of expressing it. I wasn't. All right, I want to get to
Yeah.
one more. I know we're running a
Oh,
little bit
okay.
long. The reason I couldn't cut this one was because I think it might be. I think the two most important changes in underlying foundational changes from a trend perspective. The first is consumers going to more locations, spending less time at each location, and really chasing products that they love, value, and experience. I think this is the other one, and it's the phases of the suburban shift. And one of the things that's important here is, again, we've talked about this before, but there is waves of this. People move from the city into the suburbs. There's a first time demand of places that you didn't have access to, and now you have access to. Amazing. You have a second level where retailers come to those areas to chase. But then you have a third that inherently lags behind, which is the real estate component. The shopping centers start to evolve in order to meet these demands. They start changing their perspective from a placemaking point of view. So the way that they build the centers is different in order to drive people to those places. And I'll give you a weird example that I think makes the point. None of us would say Five Below is a premium category, right? We would put them clearly in the discount and dollar lane. Amazing retailer. There, I was sitting in a shopping center where they had this really exciting high-end coffee chain called Pura Vida that's like exploding in South Florida and like other places. And it had this kind of chic high-end audience all buzzing around. And a lot of them, after going to the coffee, were walking across the street into the Five Below. And I think that there's this point is not that like Five Below is now becoming chic, but as you start bringing more of these players into these suburban environments, it's going to be more attractive for types of retailers that would have never considered those environments in the past to start considering them, which means that those areas are going to fundamentally change and it's going to shift the center of gravity, but it's lagging because you need to build, you need to create, you need to make changes.
Right.
And so I think we're going to start seeing this year, next year, in the coming years, the actual after effects of people realizing that there was a suburban shift 3 to 4 years ago.
I've not thought about that. That's a really good point. It doesn't surprise me though, given that we've had you on the show talking about this shift in the past. So you think it's going to become even more augmented here going forward?
I think it's going to be enormous. I think that's
Enormous.
the reason. Like, I think this is massive because if great shopping centers and they start getting more high end, they start getting more exciting, people want to spend more time there. And if they want to spend more time there, all of a sudden retailers and restaurant chains and places that wouldn't have expected to be there in the past are like, maybe I should consider this place because there's not enough great locations. So now I want to go there to chase this audience. And so there are ripples. If this goes, it changes the landscape in a really powerful way.
Ethan, I think that there's also this component of, not to bring in the value equation again, but the things that we're looking at on the slide are Nordstrom Rack and Ross Dress for Less. And I
Mhm.
think when you look at what's driving the next generation to those suburban shopping centers, they are looking for value, they are looking for price. And so I think that these two, obviously Nordstrom Rack and Ross Dress for Less, are hitting on that higher quality, lower price point in that like value equation. But then you also have Five Below, which is the destination for that next generation. That is the thing that they're wanting to go and do. And so I wouldn't be surprised if we continue to see, as you're suggesting, I think, this mix of like what's the value that you get from going to these places, walking around, grabbing your coffee and shopping and getting all the things you need from a variety of retailers that offer value in different ways.
And this redefined chic like what's cool, what's exciting,
Yeah.
who belongs together as a result. The one last like thing I'll say about this is we were once talking to a mall owner who said a mall is the sum of its parts. So the brand of a mall is based on the
Yep.
retailers that are in there. And we
Yep.
pushed back pretty hard. I grew up in New Jersey. The Short Hills Mall in New Jersey is the fancy mall in our area. If you are, I don't know, Ethan's Boutique Beauty Shop, it's coming soon, and I launch in the Short Hills Mall, I'm immediately fancy. So there is, yes, a mall is the sum of its parts, but it also, over time, becomes that and can imbue that brand onto the places that come inside of it. And I think as these shopping centers change, it changes the things that brands can get from being inside of them.
So put some tangibility to this discussion to me. So if you say like the average suburban shopping center that you're talking about now is X, what do you envision it turning into 5 years from now?
I think it's going to have more high-end coffee places and restaurants. I think you're going to see more people sitting there throughout the day. I think you're going to have more digitally natives that are thinking about their 10 to 30 locations. You're going to find that some of them are they're in the major malls, they're in some big cities, and then they're also in these random, like, why are you in this suburban high-end open-air shopping center?
High traffic area.
I think there's going to be an attraction of the places that you wouldn't normally expect, and it's going to change the dynamic. And part of this is going to be driven by the fact that there's just not enough space. So that competition for space, if it's great spaces in the suburban environment is getting more exciting. All right, let's take that dart throw because there aren't enough places to go.
Right. Okay. Wow. Be fun to watch for sure. All right. Is that it, or do you have something else for us?
That's what I got, guys.
You're out. All right. Well, that was great, man. Thanks for doing that.
Yes. Thanks, Ethan, for playing along and letting us ask and pepper you with all kinds of questions, whether you were prepared for them or not. Yes. All right. Well, thank you, Ethan. We really appreciate you and your time and your research as always. If people want to get in touch with you to learn more about Placer and how they can add insights like the ones you shared today to drive their business, what's the best place for them to do that?
So you can reach out to me at Ethan@Placer.ai. If you don't want to talk to me, you can reach out to ideas@Placer.ai, or you can just check out our website. We have a free version of our premium product.
Excellent. Thank you so much. Thanks to all of you who followed along with us today live. That wraps us up. Thanks, Ethan Chernofsky of Placer.ai, for sitting down with us. And thank you to our producer, Ella Siriord, who brought you all of this content. As always, on behalf of all of us here at Omni, be careful out there.